Okay, so gold is cheap, and I'm going to prove it to you. Let's get started.
To infinity and beyond.
Okay, so I'm not a financial advisor. Don't construe anything in this presentation as financial advice. Always do your own research before doing anything with your money. And today we're going to be talking about why gold is cheap. Now, for the purposes of this presentation, let's remind ourselves of what the performance of the US dollar has been over the last 110 years. Now, we are all familiar with this little chart, I think. Okay, so this is the performance of the buying power of the US dollar over the past 110 years, since 1913, when the Federal Reserve was created. And you will note that the purchasing power of the US dollar has fallen by 98%. 98%. Well done, Federal Reserve. So let's take a look at the actual performance of the spot price of gold over the past 5 years. And you can see it's had a really nice run. And right now it's in this little consolidation period here, and it's bumping up against this $2,000 level. So that $2,000 level is a very important technical and psychological level. If gold can stick its head above that $2,000 level and stay there for a certain period of time, it should rock and roll. Now, again, there's no guarantee. You never know. Okay, I'm just looking at the charts. I am a chartist. I'm a technical analysis guy. I believe in the charts because the charts do tell a story. But let's not go down that road. Okay, so if the price of gold is bumping up against $2,000 an ounce, what the hell do I mean by it's cheap? Well, let's take a look at another chart. Now, this chart is going to show you the ratio between the price of gold and the price of the S&P 500. And we're going to take a look at a 100-year chart to take a look at that relationship. Okay, so this is the chart of the ratio between gold and the S&P 500 since 1900. Now, if you look back historically, look what has happened when the price of gold has gotten down to this level. Each time the price of gold got down to these levels, they're followed by a dramatic move upward. And right now, if you look at the far right here, we're right down at this level again. So relatively speaking, when you look at the ratio between gold and the S&P 500, which is a basket of the top 500 companies in the stock market, right? When gold got down to this level, as per this ratio, it is historically proven to be a bottom. So how do you make money? You buy low and sell high, right? Very simple formula. Well, right now, gold, as per this ratio, is low. And in case you're curious, this is the 100-year performance of silver prices. And without going into technical analysis here too much, just trust me, this is a very bullish chart. And it looks like it's setting up for another run. Now listen, I'm not the only one who thinks that gold is a good deal. Central banks bought the most gold on record last year. That's for 2022, right? And this has been the accumulation of gold by the central banks in tons since 1950, from 1950 to 2022. And look at this far right bar. So central banks are buying the most amount of gold over the last 50 years. So why? Why are central banks around the world accumulating gold very aggressively? Could it have something to do with these guys? Russia and China are brewing up a challenge to dollar dominance by creating a new reserve currency. Now, these gentlemen represent what's come to known as the BRICS nation: Brazil, Russia, India, China, and South Africa. But it's really BRICS plus, right? Because there are many more people signing on to this BRICS agreement. And what they want to do is they want to challenge the dominance of the US dollar. And one of the ways they're doing it is by gathering a lot of commodities, primarily precious metals, primarily gold and silver. And the idea is that they may come up with an alternative currency to the US dollar that is backed by actual commodities, primarily gold. Now, we'll wait and see whether that actually happens, but there's no doubt that there is a de-dollarization program going on in the world. Country after country are starting to transact international trade outside of the US dollar. The US dollar is losing its dominance. And between that de-dollarization program and inflation, the value of our US dollars are going down. And let's remind ourselves of a quote by Vladimir Lenin. The way to crush the bourgeoisie is to grind them between the millstones of taxation and inflation. Our own U.S. government is devaluing our own currency through their insatiable money printing policy. And just in case you are convinced that the US dollar is bulletproof and that it is around forever, let me remind you of something, that fiat currencies, that is currencies created by governments, in our case, in America, it's the US dollar, they have a perfect record. They have a 100% failure rate. Every single one of them has failed. Let's take a quick look at the history of fiat currencies. Okay, so this chart takes us back to 1450, the year 1450. And you can see how these countries have taken their turns being the world reserve currency. It started out with Portugal, then Spain, Netherlands, France, Britain, and now the USA. Now, the longest lasting one there was Spain for 110 years. Now, we are at 94 years. Actually, that was in 1921, so we're at 96 years right now. So, historically speaking, we are coming up on the twilight of our dominance as the world reserve currency. Now, there's, you can't extrapolate, necessarily. That doesn't mean that the US dollar has to lose its dominance, but it is. It is losing its dominance in a steady fashion. Any money you have sitting in the bank is a depreciating asset. It is going down. Do we need to go back to that first chart where I showed you that the US buying power of the US dollar has gone down by 98% since 1913? Now, there is another reason why the wheels are starting to come off the carts of the US dollar and where gold is probably going to shine. This is a chart showing the projection of the federal debt held by the public from 1900 to 2053. This black bar here, this represents where we are right now, right? This is the expected increase in our federal debt, and it is unsustainable. The Western countries, we are debt-based societies, okay? We're built on debt. And over the past few years, we have been loading on debt at incredible levels. And we can kind of get away with it when interest rates were low, but now interest rates are going up. Now, I don't want to ruin your day, but let me give you a little unfun fact. The current yield on U.S. Treasury debt averages around 1.7%. Now, half of that debt matures over the next 3 years. See this chart here, the two orange bars? Over the next 2 years, half of our debt is going to be maturing from that 1.7% average. And they're going to be refinanced because they have to be replaced, right? They're going to be refinanced at somewhere between 3.5% to 5%, which is more than a doubling. Even if interest rates stayed where they are, with the dramatic increase in our national debt, the cost of servicing that debt is going to go up. But when the interest rate on that debt more than doubles, we're going to see an explosion in the carrying cost to the public on that debt. The only solution that the government has, the only one, is to print more money. And as they print more money, inflation is going to continue to go up, which is really bad for the US dollars you have sitting in your pocket or sitting in your bank. But it is really good for gold and silver. That's going to mean more devaluation of our dollars. Inflation is coming. In fact, not just inflation, but I think we're going to see hyperinflation. We're going to see Venezuela type inflation, Argentina type inflation, Turkey type inflation. It's going to get out of control. The best way and the easiest way that I know of to preserve your buying power is gold and silver. So gold and silver is not just for the rich. It's for everyone. We are in very dicey times. You don't want to wait for the value of your dollar to be cut in half or worse before you do anything. Do it now. Reduce your exposure to your bank, get some gold and silver, and establish streams of passive recurring income. Rob and I can help you with all of that. All right, so is gold cheap? Yeah, it's cheap. So I hope I made my case, and that's it for today.
Copy that.